Alright, so hey everyone, as always, my name is Fortune Berego and this is For Trade Official, where you get to learn everything about trading from beginners to advanced. And on today's video, as always, just like our tradition is, at the end of every week, we always do what we call ASR, that's Advanced Self Review. And this is the opportunity we give ourselves to just pause and take a break and just look at the past, look at the trades we took over the week and also plan for the next week coming. Because because sometimes you can be too engrossed in trading and in the charts and you might miss a lot of details. Yeah, so where you actually learn and observe, maybe there are certain patterns, certain mistakes that you keep making, is when you sit down, you journal, or you begin to do a review of those traits. Then you begin to see, okay, what are the good things I'm doing? So you can double up on that. What are the bad things I'm doing so that you can cut off those things? So those traits and there's what we call a bad loss and a good loss, and there's also what we call a good win and a bad win. Yes. So the goal is not just trading and making couple of dollars. The goal is to become a better trader because over like in the long run, you get in the long run, like it will still catch up with you. Those bad habits, that thing that is telling you to over risk. Maybe you are supposed to risk 1%. That thing that is telling you to risk 10% on this trade. The trade is a short trade, it's a short trade. And you might, yes, the trade might go well, you might make money, but that can come and catch up with you in the future. You get. And yeah, so journaling and doing self-review, this is one of the way that you can check up on those things, you can notice those things, you get. And also the good things you are doing is one of the way that you can notice them and so that you can increase the intensity of those ones. So today, Saturday, every Saturday, we make it as a point of duty to do a review and also plan for our next week. So this was one of the trade we took. I already did a video explaining how I caught this trade. Yeah, so we'll just go straight to the higher time frames. Remember, just like we explained, that it always starts from the higher time frame. It always starts from the higher time frame. Yes, because we are the retail traders and we are trading against a lot of experienced people, even people that has lots of volume of cash in this market. And then the people that really move the markets, they are not really looking at, like, they are not really diving down into lower time frames. You get. So most of their orders, most of their calls is mostly done on the monthly, the weekly, and the daily chart. So this is why we have to start from the higher time frame and just to see the overall movement, just to see the overall movement of what the market is actually doing. We don't want to be starting from a lower time frame. You get. So because for example, now the daily charts now can be showing bullish, but meanwhile if you go to a lower time frame, for that moment the trend might be seeming bearish, but along the line it will later change to bullish. Why? Because The higher time frames are always parents to the lower time frames. Whatever the higher time frame are doing, the lower time frames will always conform to what the higher time frames are doing. So in order for you to save yourself the stress, avoid a lot of losses so you don't end up blowing your account, is it is imperative that we start from the higher time frame. So for now, I'm just watching four pairs: Euro USD, Gold, Nasdaq, and BTC USD. Yeah, but mainly Euro USD, Gold, and Nasdaq. Yeah. So starting from the Euro USD, so the Euro USD has been doing some interesting move. It did some interesting move this week, and also looking at what is going on between Trump and Elon Musk and the news and everything. So it's making the market to have a little bit of shabby movement. Yes. And this is the time whereby, sometimes you need to just like reduce the risk, and you also need to know when to go aggressive. But in times like this whereby the market is kind of uncertain, so you know that okay, you need to be careful, don't overtrade, don't this is not the time to be putting on high risk, because the market is kind of unpredictable. So just as we pointed, from this point we marked out this fair value gap. Like we know that the market is always seeking for two things. It is always looking for inefficiencies, and it is always looking for liquidities. That is what actually drives the market. So the algorithm is always seeking inefficiencies, and those inefficiencies are imbalances in the market. So when price creates an imbalance, the algorithm will most likely want to come back and then balance the equation. Yes, to come back and balance the equation. So if the market offered price for buyers but did not offer enough for sellers, it will come back like to balance the equation, and that is what we call an FVG. So just like we marked here. So we mark these points, and we saw price came into this FVG here, this one. We saw price came into this FVG. Yes. And so we were watching, and then we saw a massive bearish candle. So it's completely covered the fair value gap, and then price began to push upward. So we began to see higher prices upward. So yes, so and thereby making this an order block. So order block is just one of the PDRAs that we use. So thereby making this massive bearish candle, because this is the last bearish candle before this bearish move, before this institutional order flow. That's this bearish move. So this candle now, price now using it as an order block. We marked out that point, and we saw that immediately this candle taps into the OB, so it began to move higher. So from this imbalance here, this order block, where do you think will most likely be our next target? This buy side liquidity here, this one. So we are still looking forward to see price take out this high. So this buy side liquidity. Yeah. So we are looking forward to seeing price taking out this high. So So on a it's kind of clearer on the weekly time frame. So we can see, because another thing, price moves from internal range liquidities to external range liquidity, which means when it comes into an internal range liquidity, then it is now looking for an external range liquidity, or it moves from external range liquidity to internal range liquidity. So we saw price filled this fair value gap, this imbalance, which is an internal range liquidity. So now it is seeking this buy side liquidity, which is an external range liquidity. So it moved, in this case now, it moves from an internal range liquidity to an external range liquidity. So our target is this high here. So that being said, for this week, we are mostly going to be looking for buys. So that's our buyers for Euro USD. We are still going to be looking for buys on Euro USD for this week. Still going to be looking for buys. So okay, yeah, but we are not going to force it actually, because price can do some crazy things at times. So we are going to wait for our confirmations before we just allow price to show us what it wants to do, not to force it, but to allow price to show us what it wants to do, then before we take any action. Yes, so okay, so it's it's as if it's price stopped. This is a 15 minutes time frame. It's as if price stopped on somewhat like a consolidation. So we are also going to be waiting to see which of the sides price um break out from. If it breaks out from this place or it breaks out from this place. But basically, what we are going to be waiting for, we're going to be waiting for the section, London and New York. Then we'll be waiting for liquidities to be taken. Yeah, liquidities to be taken. Yes. Or yes, or we're going to be looking out for relative equal highs or lows. Yes, because I've noticed that most of the times, and this happens especially on the 1 minute time frame, as soon as price opens, then if there are any relative equal highs or relative equal lows, yeah, like price will create equal highs or lows, and then it will later on, or it will go straight and attack those places, because those levels, they are too smooth. So the algorithm will seek those levels to attack it. Yes. So that being said, for Euro USD, we move to gold. XAUUSD, gold. Now the gold is quite an interesting one, because it has been pushing upward, and if you even look sef, this on the weekly time frame, if we measure this, you know if we measure from where gold um If we measure from where gold took out an all-time high, you will see that it has done a lot of percentage from that place, like from here, from this place. Now see this. Now my just look at this. When gold took out this all-time high, so when gold took out this all-time high, then and yeah, even this one also. Let me mark this one too. Even this one too. So price took out this all-time high and then consolidated around that area for a period of time, and then push to the upside massively, like did a lot of percentage. Like you can imagine, this is a weekly chart, so you can imagine the amount of moves, the amount of pips that this is. So obviously from the weekly chart, we are seeing that price is telling us I'm bullish, I'm bullish, I'm bullish, I'm bullish. Yes, so let me taking off all these. So yes, and another thing again, you can see that this our FVGs that we marked, they are still holding. They are still holding. Look at this first one, look at this second one, then look at this one, look at this one. Like you can imagine, see how all the bodies of the candles closed above. Only the width of the candle did the damage, but every single one of them, the bodies of the candle closed above. So that was giving us a strong confirmation that this FVG, this daily FVG is valid. Yes. Yes. So on the weekly chart, let me let me make this just neat and simple so that we don't stress. Now on the weekly chart, so we have a little bit of an inefficiency here, so which price has already filled and all of that. So where do you think price will be seeking now? So I'm thinking of this high here, this high. So since price has done the work below here, so obviously I'm thinking of this high, this buy side liquidity here. Yes. So our draw on liquidity is this high here, this buy side liquidity. So on the let me come to a daily. So on the daily, this level is still holding. This level is still holding. This one here. This level is still holding. And also this one too. So that being said, our target is still this high here, this high. That's our target. But so we might be seeing some shifts from this place, and from this place. Something like this. Something like this. Yeah. Yeah. And then okay. On the daily charts, it might use this as another block. As another block to begin to push higher. It might use this as another block. Yes. So this is what now so as soon as the market opens, we are not going to be rushing. What we'll do is that we'll be waiting to see how price, like the next daily candle that opens, how it reacts on this, because we are hoping to use this. There's this bearish candle here, this one, this last bearish candle before this large bullish candle here. So we'll be hoping to see the next daily candle that opens. We'll be able to see how it reacts on this level. Yes. So if it completely fills it, even coming down to this low, that's this low here, this low here, because there's a possibility that it just might want to use this. There's a possibility that it might want to use this as a sell side liquidity and seek it and take it out. You get? But so that's why we're going to be waiting to see, like, if it completely covers this bearish candle or even close below it, then we know that okay, it's seeking this daily candle low. But when we see that okay, it closes above, or we see the price action, we see how the daily candle reacts from this level. When we see a push to the upside and then we see some signatures, then it will give us a confirmation that okay, from this point it wants to continue. So that's what we are going to be looking at. Our draw on liquidity is this high. We are still targeting this buy side liquidity here. So as the section opens, we'll be waiting to see how price reacts from this candle here. If it uses it as an order block and push upward, yes, then we'll now scale down to lower time frame and look for our signature and look for our trades. So that's I think that's for gold. That's for gold. Yeah. So yes. So if we notice that okay, price wants to use it as an order block to push higher, then we can come to lower time frame, maybe to look for market shift of structure. Like we just notice for that signature of change of state of delivery, like showing us that okay, the algorithm now has changed its phase, now it's now going to the upside. So before we even begin to look for our trades, yes, just to be on the safer side. Just like I said from the beginning, that we don't have to rush it, but instead we'll wait. Let the market tell us what it wants to do. Let it tell us what it wants to do. Okay, so that's for gold. Then that's what I'm going to be watching out for gold for this week. So coming to NQ, that's Nasdaq. Coming to NQ. Okay, yeah. So NQ is quite interesting, and gold it's respecting our levels. So this from this our sell side liquidity, and for the past weeks now, or even close to months, we have been looking for this buy side liquidity to be taken out. And from the look of it, price is still showing us that okay, I'm willing to still continue to go to your direction. And remember from our last video, our last analysis, we marked out this point. We marked out this point and said that yes, our target is this buy side liquidity. So and we notice and then we notice that on the weekly time frame price came into this fair value gap. So we knew that we were going to see some reactions from this place. So that's why we wanted to see if yeah, so we noticed that we're going to see some reaction from this place. Yes. So that's why from this point took we went on a little pause, you get, and now we are seeing that yes, it is willing to continue to go to that direction. And we can see that it has almost completely passed through the fair value gap. So so we are seeing that on the weekly time frame it wants to use this as an inversion fair value gap. So as the market opens, the next candle that will open, we are going to be seeing if it will begin from above, from the up of this fair value gap. Then we know that okay, it wants to use it like a ladder to continue to go to our initial draw on liquidity, which is this buy side liquidity here. So but from the look of it, I think it's going to continue to that direction. So on NQ we are still looking for buys, we are still seeking this buy side liquidity. So on the 1 hour time frame, this is that our weekly FVG, and see you can see the way price just consolidated around that area. So and this is that's our daily fair value gap. So we can see the way price just respects that level. You can see just only one two. two candles just went down and it just started going to the upside direct. So that's for NQ. Our target is still this um this nearest high here, this high here. So, and another thing again we should notice is that we can see an example of a turtle soup on a much larger scale here. You can see it on the daily time frame. So the moment price came down, took out this sell side liquidity here, then we can see the massive break of structure. Look at this daily candle, just from that low all the way to almost middle of, starting from from where the move started from. So we can see that this is a change of state of delivery and this is on the higher time frame. So these are some of the confluences that are giving us um proofs to know that okay, we are in sync with the people that really move the market. So these are some of the powerful signatures that are giving us the confidence to know that okay, yeah, we're still in line with where it is actually moving to. So our target still remains this buy side liquidity here, that's this high. Yes. So as for Bitcoin, we're not going to be checking Bitcoin because don't want to really trade Bitcoin for this week. So we'll just stick with Euro USD, gold and Nasdaq for this week. So on EU, our buyers still remain buys this buy side liquidity, and then gold still buys this buy side liquidity, and Nasdaq too still. And if you notice, our direction for these three pairs are kind of going in the same direction because all of them are linked with the dollar. So obviously if the dollar will be going down, then EU is going to be going up. Then when you come to SAU, that's gold to dollar, and you know generally dollar is going down, which means gold too is going to be going up. So that's another way again that we know that okay, we might just be right because all three of them, like they are aligning to, yeah, they are aligning, all three of them. So that's another confluence again. So so that's it for gold, Euro USD and Nasdaq. So that's it for today and see you next time.